Hello, welcome to this webinar interview. I'm Francis Seeley from GlobalNet 21 and Info Voices, and these are one of the regular interviews we do with people who nationally, locally, sometimes globally, and this time locally, are doing something to make a difference. We do a lot of webinars and interviews around that because people are interested in what people are doing. And today, we're going to look at credit unions. And we've got Julia Daniel with us, who's going to talk about that. Julia is one of our admin people on Enfield Voices, but she also is a manager in the Enfield Credit Union, and she'll tell you about that in a minute. Credit unions are part of what has been called, the cooperative movement generally. But before we go into that, do you want to tell us a little bit about yourself and why you're involved in the credit union movement?
So my background is actually in human resources, recruitment and training, particularly in retail. So I've worked for various companies during my career, and I was asked by the credit union to help them out with a couple of personnel issues initially. This was a few years ago, and to do some then I started doing a bit of some other volunteering type stuff. I was quite interested in the sector, and when they had a job opening, I decided to apply. I do have sort of family connections, which is how they came to ask me initially to do the HR stuff, and I've been involved ever since. That's about 5 years ago, and it's quite an exciting sector. It speaks to me because there's so many different things. There's different sides to it. I've got quite involved in the sort of financial capability side. I've done some training courses because, can't stop the training, and some other bits and pieces. So money mentoring, that side of it, and obviously just at the moment trying to grow the credit union, trying to access some of the latest digital technology in the financial sector to try and help bring the credit union to more people.
Okay, right. So you're trying to grow a credit union, but some people may wonder what a credit union is. I mean, a lot of people will know, but let's assume some people don't. So do you want to tell us, first of all, then, what is a credit union and how does it differ, for example, from a bank?
Okay. I always assume that nobody knows what a credit union is, or that if they do, if they've heard the term before, that they might not know exactly what we do. So its most simple terms, the credit union, so we're a cooperative, so people save money with us, which is all insured by the Financial Services Compensation Scheme, and then we lend that money to other members. So different credit unions do different things. We focus primarily on savings and loans. We do services for individuals, for families and for businesses. How we differ from a bank, well, there's a few similarities. So we're regulated in very much the same way. So we're dual regulated by the Financial Conduct Authority and the Prudential Regulation Authority. And as I say, we are covered by the Financial Services Compensation Scheme. But we differ from a bank in that we have a focus on a specific group or groups of people, which is called our common bond. So without getting too technical, it's what we have in common with our membership. So to become a member of North London Credit Union, you have to live or work in Barnet, Enfield, Haringey, Waltham Forest, or parts of Hertfordshire, or work for one of the employers that we partner with, or belong to one of the business associations that we partner with. So there's a few different ways that you can become a member, but the important thing is that one of those eligibility criteria fits you. And that's probably the main difference from bank. The other big difference is that we are owned and run by our membership. So we have, each member gets a share, regardless of how much you have saved with us or how much you are borrowing from us. Every member has one vote. So if you are a member, you can come along to our AGM and you can vote on various things, like the dividend that we pay, for example, who gets to be a director, and any other things that come up as and when. So I think the local focus and the fact that we are answerable, run by our members, probably the biggest two differences from the banks.
Okay, well, we'll come to some of that, and especially the common bond in a minute. But, if anyone asks what services you offer, what are those services?
So as I say, so each credit union does something different, and we're all independent of each other, which is both a blessing and a curse. North London Credit Union, we focus on savings. We have various types of savings products. We do ISAs, we do junior savers. The majority of our members just want somewhere to put £10, £20 a month in an account, separate from their bank, so that it's there when they need it. We also lend money, so we also do loans. So you can only have a loan if you're a member, but obviously joining the credit union is very straightforward. And the money for those loans comes from the savings that our members are saving with us, and the interest on those loans pays our running costs. We also do prepaid cards, we do business loans, and we do, if for specific projects, we do things like, so I've done money management workshops for parents, for example, in local schools, but that was part of a specific project. But our main focus is on savings and loans and helping people to manage their money more prudentially. Yeah.
I mean, a lot of people sort of join credit unions to think about it because they want to get a loan because they haven't got one elsewhere. I mean, is getting a loan automatic, or is there a filtering process?
There is a filtering process. In terms of what we look at when we make a loan decision, the most important criteria are that it's affordable for the applicant, so it doesn't make their situation any worse. And it can be the repayments can be comfortably managed. And then the second element, which is the more contentious part, is in terms of, are we likely to get that money back if we lend to that person? So we take into account things like their membership history, any previous loans they've had with us, they've always paid it back, or they've been saving for X amount of time. But as we don't know all our members individually, the only real way that we can do that is to do a credit search on the person. We're not interested necessarily in the credit score. What we're interested in is what goes into that score. So what we're looking for is basically risk that we're not going to get our money back, that this person's got a history of taking credit from elsewhere and then not repaying it. So defaults and CCJs would go against that. Also payment plans. A lot of people seem to be in payment plans or IVAs in particular and not really understand that you're not supposed to take more credit out when you're in a formal IVA, for example. So affordability and the risk, because it is members' money at the end of the day, and much as we would like to lend to everybody that requests a loan, we have to think about the good of the membership as a whole.
You must get some people who clearly aren't going to get loans but think that you're an easy touch and you have to turn them down. I mean, how do you go about dealing with that sort of situation, especially if they're members?
So it is very difficult, actually, potentially if they're already members and they've been members for some time and they apply for a loan and we have to decline them. I find that if it's likely to be upsetting for them, or they need to be signposted to somebody else, then we will always call them. We now accept loan applications online, and if they've applied online, then unless there's something as a particular reason not to, we would give the decision online as well, because we get an awful lot of applications now, and it wouldn't be possible for us to phone every single person and give a really detailed reason as to why, and most people I think know. But where somebody I think would benefit from being signposted to somebody like the CAB, who we work with very closely, or Step Change, Pay Plan, or one of those sorts of debt charities, then I will call them, or one of my team will call them. I've spoken to a couple this morning. They generally understand. I don't get many people who get angry or whatever. We would refer them on. As I say, I've got a strong relationship with the local CAB. So if it's a housing issue, which a lot of these are, or a universal credit issue, I can usually refer them on to somebody that can help them. It's not always the answer that they're looking for, but it's probably more debt is not necessarily going to help them with the situation that they find themselves in.
So when someone applies for a loan, who is the person who makes that decision about the loan? Is it you and the staff, or because you have a committee and you're based upon the common bond membership, does the committee get involved in that at all? Or is there an appeal to a committee, for example?
So so the lending officer would process the loan. At the moment, it's fairly manual, but we're moving towards making that more efficient. And once it's been processed, so we have a look at the bank statements, for example, the income and the expenditure, we do the credit check. It's passed to the credit committee, which sounds quite grand, but in reality, it's one or possibly two people, depending on the amount that's been applied for, who will look at it. And we've got a credit policy, so we look at it in relation to our credit policy. So we're not making decisions based on whether we feel like lending or not. They are specific to that credit policy and the guidelines that we've got in the credit policy. So that is that's an internal document, but it helps us to assess all the loans on a fair basis. For example, we have tolerances in regards to default levels. We have levels of debt that people can already have before we think, well, actually, they've already got quite a lot of debt outstanding compared to their income, and we don't feel comfortable lending anymore. So we try and be as fair and transparent about the reasons that we wouldn't lend. And sometimes those decisions are difficult, but we do base them all on a document that we hold to. That makes sense.
Yeah, I mean, in fact, it's true to say, isn't it? Correct me if I'm wrong, that the default level in credit unions is much lower than it is in banks, because there is, through the common bond, a sort of trust arrangement that takes place.
It can be. Again, it's all down to the individual credit union to manage that. Managing delinquency or managing sort of bad debts and late payments is difficult. It is a full-time job for somebody. In terms of the affordability, we like to think that the fact that somebody's knows us, is a member, appreciates the individual service, means that they're less likely to not pay us. But the reality is, if somebody loses their job or suffers from some ill health, then if they haven't got any money, they haven't got any money. But if it's a choice between paying this person and paying us, people will pay us. But obviously, if somebody's having difficulties, then we would try and do what we can for them. If somebody doesn't pay because they never had any intention of paying, then we are quite tough with that, because it's our members' money. We've got a responsibility to our members to try and get that money back. If it's somebody that can't pay, as long as they get in contact with us, then we will do what we can to help. As you say, I do speak to people at COB sometimes, and they say, oh, I've got this person, a couple of weeks ago, they wanted to do a debt management plan, but they didn't want to put you in it. So they want to carry on paying you, which is nice. I couldn't possibly comment on the ethics of that. But I think with delinquency, the reason that we have the credit policy that we do at the moment is, a few years ago we did have quite high bad debt rates, and we've managed to get that down. We got stricter with our criteria. Some of the loans that we sort of probably would have taken a chance on previously, because they're only a small amount, particularly for new members, we probably wouldn't do now.
Okay. we live in an age of austerity. There is a growing problem of poverty in this country, and many people go to loan sharks who charge exorbitant interests and make people go into more and more debt. Some people are saying, you know, credit unions are the answer to the loan shark problem. People should go to credit unions, they should talk to them. So is that good advice? And do you deal with people generally who are on lower incomes?
We do. I would say, so from a sustainability point of view for the credit union, we don't get any external funding. So we don't get any local authority funding, and we're not a charity. So we are sustainable through our through the payment of interest on loans. So there is only so much that we can do. If somebody can't afford to repay a loan, it wouldn't be right, and our regulators would rightly come down on us if we lent to that person and put more pressure on their income. In terms of, we will lend to people on benefits and on low incomes, but it has to be a loan that we would feel comfortable doing, and that we would get, you know, we would get back from that person. I think we're slightly different from other credit unions. We started off as a business credit union, and we expanded our common bonds in sort of 2012. So we're not a cash credit union. We're not a substitute for a bank. You know, we don't provide banking services as some credit unions do. There is a perception that credit unions are sort of a bank for poor people, which obviously we're trying to say, well, yes, we can service that market. That's a lot of credit unions were set up for that, and we want to alleviate poverty, but we can't just do that. It's not a good business model. It's not sustainable. So we have a lot of members who are employed by local organisations. For example, we do payroll schemes with the council, and with North Mid, London Waste, just for example. But in terms of your original question, better us obviously than a loan shark. But if people are referring them to us because they don't know what else to do with them, it's likely that we're not going to be able to help them either, and then it becomes just one more person saying no to them, because, as I said, more debt doesn't necessarily solve the original problem, which is that a lot of people aren't financially educated, so don't know how to manage their money, and also just don't have enough of it. Housing costs, we know, are very high in Enfield and in North London in general. We see some problems with universal credit when it's been brought in, and debt isn't necessarily, a loan from us isn't necessarily going to help them through that.
But some people will say, aha, this sounds a really great idea, I want to belong. So can anyone join a credit union?
Yes, yeah. So anyone who lives or works in North London, or for one of our employers that we work with, regardless of where they live, can join the credit union. We don't charge any joining fees or any fees at all apart from interest and certain fair usage fees. So anybody can join, anybody can save with us, anybody can apply for a loan with us, as I've outlined. It's it's the eligibility for loans. We can't guarantee to lend, but we're happy to discuss it with them. We're happy to have a look at it. I'm always happy to have a chat with people before they put an application in. But yeah, anybody can join, and we'd be, my ambition is to grow the credit union so that people understand what it is that we do. We have a lot of our members who join because they agree with our principles. They want their money to work in the local area. They're happy that we lend to local businesses, to local people, and obviously if we can get a return to them in terms of a dividend every year, then that's great, and we do try and do that. And they can share in our profit, but we can't guarantee that. Most people, as I say, save with us small amounts every month, and it's there for when they need it.
Okay, so because it's a membership-based organisation, people might want to join, but they might say, oh, I like this idea, I want to start a credit union. So can a group start a credit union if they wanted to? And maybe that can explain a bit more about the common bond, what it is they need to have to do that.
It's not easy to start a credit union. The Financial Conduct Authority and the PRA would say, why do you need to start a credit union? Is there not one that you can join or your group can join that we'd be better placed to serve this group? The reason being is it costs a lot of money. So you're looking, because of all the, again, don't want to get too technical, but because of the ratios and the reserves that you need to have, it's not a cheap option. People do start new credit unions, but you do need to go, there's quite a lot of regulation that you need to go through, and red tape. It can take over a year to sort of get to the point where you're authorised to take deposits, for example, and to lend. As I say, the dual regulation thing complicates it. The best thing to do is, if somebody is interested in starting a new credit union, I would suggest that they make contact with the largest credit union trade body, which is ABCUL, the Association of British Credit Unions Limited, and they will advise them on the best way of going about that. Because occasionally there are credit unions that are sort of dormant, I guess, and they could be picked up. The trend in the UK regarding credit unions is a reduction in the overall number of credit unions. Some of those, sadly, have gone into liquidation, but others, more commonly, they have merged or been taken over by other credit unions, are joining them.
Okay, so I mean, for example, I don't know, let's take an example, a trade union could form a credit union, couldn't they, if they wanted to?
The trade unions actually have very good relationships with their local credit unions, Unison and the other one that I forget. They keep directories of credit unions that their members can join, and we have a strong relationship with the union representatives at Enfield Council, for example. They will refer people to us if the staff are interested in joining. But they could potentially create a credit union, and I suppose anybody could. You would need fit and proper people to run it. And as I say, it costs quite a lot of money, but you could start your own credit union if you really wanted to. I think the important thing would be to look at how you would make it sustainable. So is the group big enough that you're going to cover to make a credit union sustainable for what you want it to do? Or is it just going to be you and your friends, for example? Or is it going to be a larger group?
Okay, you mentioned earlier that you do things like workshops, and because you're membership based and there's that sort of common bond relationship you have, do you do other ancillary activities like give advice? Yes, like do workshops, maybe have get-togethers with members so that they can find out more about you? I mean, do you make it more friendly than a bank, in other words?
Well, we have our AGM, and we every year, and we do serve. We have some food, and we have a chat afterwards, and people can ask questions and stuff like that. In terms of workshops, I have gone along and run sessions about, what is a credit union kind of thing. I did one at Small Business Saturday last year, which was very well attended, at Enfield Business Centre. I go along to events that Church of England have been working with us in the last couple of years, and they've put events on. So I've got, in terms of workshops, so we were funded by Martin Lewis's foundation to do I did some money workshops, as I say, in local primary schools. I did them as coffee mornings, and we did sort of people could just come along, and I did some stuff on budgeting. I've done those in local churches as well, and with local groups. Realistically, it's quite difficult to do those without unless they're funded. I can do one-off things, but there are organisations that do that as a core function, and are probably better placed to do those.
Okay, we've got someone called Michael Fisher who's joined us, and he's from Germany, and he says, do you have connections with other credit unions in other countries? Because in some countries, I mean, North America, for example, they're incredibly successful, much more widespread than they are here. So do you have links with credit unions elsewhere?
So credit unions in the UK through ABCOL and other trade union, sorry, I'm doing it myself now, other trade bodies are members of the World Council of Credit Unions, but he is absolutely right to say, in fact, the credit union movement kicked off in Germany in the 1850s. I don't know if you knew that, you probably knew that. But in the UK, we seem to have gone the sort of building society route in terms of mutuality. So building societies developed, whereas credit unions didn't really develop over here at the same rate. The co-op movement obviously has always been quite big in the UK, but credit unions really were brought to the UK with the Windrush generation to a large extent. So the first official credit union, there's a couple who vie for that title, but one of them is Hornsey Credit Union, just down the road, which was started by recent Caribbean immigrants, sort of in the 50s and 60s. So in the UK, we've not really got that big credit union movement. That's obviously an aspiration that they have in other countries. So in North America, for example, there are massive employer credit unions. And in Ireland, we have big credit unions, which sort of more or less are like high street banks. And in quite a lot of the Caribbean countries, main banking is done by credit unions. But in the UK, we've just got over the 2 million member mark as a whole. And so there've been real efforts in recent years to grow the movement, to get the word out there about who we are and what we do. But we're not there yet.
Okay, I mean, I remember reading some time ago about the Caribbean credit union in Hornsey and how it was one of the first ones that started. And that was a sort of pioneering one in London particularly. Okay, so, you know, we're getting close to the end. And if people wanted to find out more about, you know, where do they go? Peter Feltham, who was on there, has asked, for example, is there an office they can go to drop in and have a chat? I mean, is there, and how do they contact with you? How do they contact you, by email or by website or whatever? How do they make contact?
So I'd suggest the first thing they could do is go to our website, which is www.northlondoncreditunion.co.uk, and have a look. That'll give you more information about our services. If you want to come in and have a chat, we would really appreciate it if you could make an appointment. The phone number is on our website, or you can email us. There's a contact form on the website, or you can email us through the website. And we're happy to answer any questions that you've got. But we are quite small, which is why I asked to make an appointment, because if lots of people suddenly turn up at the office, then we might not be able to see them that day. So happy to speak. Most questions we can answer on the phone, but we do obviously understand that people do like to see people face to face on occasion. We also have online joining and loan applications. And we have some drop-ins around Enfield, which, so Enfield Council, although they don't contribute to our core funding, we do still get a lot of support from them, both from individual councillors and from local MPs as well. We're very lucky in that we enjoy cross-party support. But the council have given us space in public buildings to do drop-ins. So in Enfield, so in a couple of the libraries and in John Wilkes House, we are there every week, and the details again are on our website. I'd suggest calling the office first, because obviously those are subject to staffing, and we do rely quite a lot on volunteers as well as our paid staff to run those.
Okay, and so how do you see the growth of credit unions in the years ahead? Are you optimistic that it will, you know, play a significant part in the financial industry of this country?
I hope so. I mean, we've been around now for a long time. North London Credit Union, we've been going for 25 years. I think we do play, along with probably CDFI's community development finance institutions, we are a growing part of the financial sector. I'm not anti-bank. We get a lot of referrals from banks. We work very well with banks, but I think there's I think there's a place in the financial sector for co-ops, for membership organisations, for people who prefer that sort of individual sense, who prefer to see their money working in the local community. I think what credit unions have been trying to do, with varying degrees of success, is to adopt technology that's now available. We're working with a fintech partner to look at what we can do to make ourselves more accessible. I think realistically, if we're trying to achieve large growth, it's not going to happen by us saying, oh yeah, you can come into the office and you can fill in this form. We need to be where the potential members are, and at the moment potential members are online, so that's where we need to be in order to make the most of that potential. So that's what we're trying to do. Obviously, I think there will always be people who prefer to do things face to face, and we'll always be here for them. But in terms of growth, we have been trying to harness that new technology that's there, but obviously it has to be secure, it has to be affordable for us. We can't afford to spend thousands of pounds on a new system, and obviously because it's people's personal information, that is that is the priority for us, making sure that that's safe. But I'm cautiously optimistic. The regulators are quite supportive of the sector within the bounds of making sure that we are doing the best for our members and that we're operating prudentially. And as I said, credit unions do enjoy cross-party support. So the coalition put in some money for a big expansion project a few years ago. The Conservatives like us, Labour likes us, the Lib Dems like us. So it's just about harnessing that in a practical way. How can we get them to give us practical support, not just money, but how do we get them to support our growth in practical ways, and through the regulation framework as well.
Okay. All right. Well, we covered quite a lot of territory in this interview, and we've done the full half hour. So that's great. And, a lot of people who don't know about credit unions or didn't know about credit unions will know a lot more now, and they'll also know how to contact you and find out more if they want to. So, Julia, thank you for doing this. And I think it's been very useful for a lot of people. So thank you.
Thank you, Francis.
Okay. I will finish this interview now.